Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Steven Ehrlich, Director of Digital Assets Research over at Forbes Crypto. Steve, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. It's a pleasure to be here.
All right, and it's been quite a couple of weeks for the industry with the approval of multiple Bitcoin futures ETFs in the US. How is that impacting the price of Bitcoin?
So it's been a really strong month for Bitcoin so far. In a report that I'm going to have come out in a couple of days, I really break down how this is different than some of the other sort of capstone events in Bitcoin that have actually been disappointing to investors in the past. For instance, when the Bitcoin futures ETFs were first approved in December 2017 by the CFTC, that was right at the height of the ICO craze where Bitcoin first approached $20,000, and it sort of coincided perfectly with the subsequent crash, the 75% crash in the market. Same thing this past April with Coinbase when it went public. That was kind of seen as a valedictorian step for the industry as a whole. Bitcoin set an all-time high of over $64,000, but shortly thereafter it fell again. It was sort of a case of buy the rumor, sell the news. This time, there were some fears. It was more bullish sentiment, but there were some fears that when this actually happened, it would lead to a similar type of event. But Bitcoin had been sort of leading the market in a couple of weeks throughout October to when this actually happened, as it became clearer that a Bitcoin futures ETF was going to get approved. It set a new high above $67,000. And then while it retraced a little bit last weekend below 60,000, it recovered since then. And I think right now it's somewhere in the low 60,000s. And I get the sense looking at market and technical data that it's going to stay there for a while. So overall, it's a very bullish move for the asset moving forward.
Right, especially if it mirrors what it did last year. So, Steven, let's take a step back here for a moment. What are futures ETFs and how do they differ from spot markets? In other words, why has a futures product been the first one to be approved?
That's a great question. It kind of also leads to why some analysts were skeptical or nervous about this event, because Bitcoin futures ETFs have some specific properties and characteristics that make them different from a spot ETF. A spot ETF, basically each share would represent a certain nominal amount of Bitcoin that's held in a custodian somewhere, whereas a futures ETF is what's known as a derivative of a derivative or a derivative squared. A futures ETF is a derivative because it's a financial instrument based on an underlying asset, whereas these futures ETFs are derivatives based on top of a derivative itself. So they're a bit more complicated. And basically what they mean is that for these ETFs, which now virtually anyone can get through their brokerage accounts, you're not buying Bitcoin. You're buying a certain amount of Bitcoin futures contracts that are traded at the CME or other regulated platforms. And that does lead to some extra risk for investors. For instance, these funds have to be a bit more actively managed. They have to be rolled into each subsequent month's contracts, which takes away some of the fees. Also, once you get further and further out, for instance, CME actually has a rule that a participant can only hold up to 2,000 monthly contracts in Bitcoin, and the ProShares ETF, which launched last week, very closely almost hit that limit and had to buy out into November. That can lead to additional price risk, which means that the price of these ETFs could diverge from that of the underlying asset. So investors really need to be aware of that, because sometimes it can be up to 10 or 20% of the total return that might get wiped away. That said, given all this, why was this type of product approved first? I think it just has to do with Gary Gensler, the SEC chair's comfort with the CME, which is where most of these contracts trade. He is a former chair at the CFTC, which is the CME's regulator. And unlike the spot market, the global crypto spot market, which is very, very dispersed, this is far more concentrated. So I think he's just much more comfortable with this platform for right now. And I know some people in crypto are upset about it, but sort of what I tell them is something that I say to my 5-year-old daughter, which is basically right now you get what you get and you don't get upset.
Right. Well, I mean, Steven, it's an important distinction to make, and I hope the industry does a good job on educating investors who come to these ETFs, because you hear of this in an ETF wrapper, which most folks are understand or familiar with. But as you said, the futures product is certainly a different animal, and it gets more expensive, to your point, as you look out to farther dated contracts. So I think the industry really needs to put its money where its mouth is and educate investors when it comes to these kinds of products. And not even just Bitcoin products. We've seen, other type of events where investors didn't understand the futures component to the underlying, and we've seen that happen in a number of different ETFs. So that's a great point that you made.
Yeah. So people that, oh, sorry, go ahead.
No, go ahead, make your point.
I was just going to say, so people that are interested in investing in this product, really take the time to understand how they work, how it's different from, for instance, a trust offered by a company like Grayscale or Skybridge or Osprey, or just buying it directly through an exchange or a brokerage firm. There's a lot of options out there, and it's important for each investor to make the right one for their own profile.
Yeah, that's a great point, Steven. Aside from crypto assets, there are many stocks that also track the price of Bitcoin. Did they see similar gains?
Not quite to the same extent, but they were bullish at the same time. I think this was a rising market, and Bitcoin mining stocks like Marathon did very well. Silvergate Bank, which is very closely aligned with the industry, also performed strongly as well. And I think people, when you see Bitcoin go up like this, you see a lot of sort of tangents and sort of like complementary plays do well. Aside from Bitcoin mining stocks and MicroStrategy is another one that's sort of seen as a Bitcoin ETF. You also see a couple of other crypto assets like Zcash and Stacks, which are sort of crypto derivatives. Zcash is a more private form of Bitcoin, and Stacks is trying to build DeFi on top of Bitcoin. They all did well. That said, typically, the crypto market moves in the same direction, but not always at the same speed. And when Bitcoin started to dip over last weekend below 60,000 before recovering, that's when we saw a lot of altcoins, such as Ethereum and some of Ethereum's major competitors, like Algorand or Solana in particular, that just set a new high. They started to catch back up again, and investor flows have started to move back into some of these alts as well. So we see a bit of a local top. We see some of the more savvy investors then roll into alts to try to stretch out some of those gains. But overall, the market still seems very, very calm, I think, for such an exciting couple of weeks.
Right. And Steven, do you think to get further growth within the space overall, decoupling from the move in Bitcoin would be a healthy thing? Because these projects are very different from one another. Just because you're in the crypto space doesn't mean you're like a Bitcoin.
It is. And one of the metrics that we really look to understand the decoupling from Bitcoin, aside from correlation, is also just Bitcoin's total market dominance. I think right now it's somewhere in the mid 40s as far as the total crypto market cap. Ideally, I'd like that to be lower, and I'd like to see less correlation between all of the assets. That's still an issue that we're trying to. I think that's an issue that will abate as the market becomes more mature and research and reporting into it becomes a bit more sophisticated, and it's based on sometimes more real use as opposed to hopes and future expectations. But I do think that would be healthy long term.
All right. And finally, to wrap up here, of course, we have to ask about Coinbase having surged 40% this past month. Do you think part of that was correlated to the moves that we saw with the futures approvals?
I think so. To a certain extent. Coinbase had a very strong month after not performing particularly well since its direct listing in April, which was really a watershed moment. But it's up about 40%, and I think there's a few reasons for that. One, just general excitement about the ETF, which led more people to see what else is out there. But I think the biggest factor was the fact that Coinbase announced earlier this month that they're going to be launching an NFT marketplace. And that's been like the hot issue for the entire year. And right now it's dominated by some NFT specific platforms such as OpenSea, which I think handles about 90% of all NFT trades on Ethereum. Coinbase, when they announced the waitlist, I think they got 1 million or 1.5 million people on the waitlist within 24 hours. And given their massive customer base, this could really be a major driver of business for them moving forward. So it really kind of helped the stock pick up. You can actually see a correlation in the stock going up as soon as this announcement was made, and it brought it back up to about $325. Still a little bit off from where it began trading, but it's certainly moving again in the right direction. And Citi actually just started coverage of Coinbase and put out a report, I believe, today, giving it a buy rating with a price target of $415. So it definitely looks like Coinbase is back on the up and up.
All right. Steven, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill. Pleasure to be here.